9/16/2019, and it is Tackle Trading's halftime report on a Monday morning. Matt, volatility in the oil markets, craziness from a political and a conflict perspective. Stock market still not really selling off aggressively, but first off, how are you doing this morning?
Tim, I'm doing actually very, very well. Excited to be here. And before we get into all of our oil analysis, because obviously that's kind of the lead here today, I just want to wish you a very happy public happy birthday there, brother.
Happy birthday, Tim.
Turning 40, the young man is growing up. How does it feel?
Feels like 40. All right. So whatever that feels like. Yeah, no, it feels great. I appreciate that, boys. And we had a wonderful, event here at the house yesterday. Big party, Matt. You and your family came. All of our family came. And it's just nice to know, that you've got those kind of people in your life. There's no doubt about it. Family, friends, community. I mean, that's what it's all about. And at 40 years old, even today, after all of these years, when you guys sing happy birthday for me, I hated it. So I don't like birthdays.
And obviously that's why I took a video of it and put it on Twitter.
So oh God.
Had to do it. I didn't have a choice. I had to get it out there public. And crew, let's go ahead and give Tim a big happy birthday here. To you do a lot for the team, and we're all very appreciative of what you bring to the table. Now let's talk about good old crude and get everybody updated on what kind of happened here this weekend. Cody, come on in here. Why don't you hurry and update the crew on kind of what happened over the weekend in Saudi Arabia?
All right. So the overall basis of what happened is there were oil attacks. So the Saudis and a rebel group, the Houthis, if I'm butchering that,
better than what I would have done. I can promise you that.
Okay. They've been in a long-standing conflict for quite a while. And the rebel group basically attacked multiple oil refineries in Saudi Arabia, including one of their major oil refining facilities. So when that happened, it brought down, 5.7 million barrels per day out of the market, which then dropped the oil market by 5%, or dropped the oil supply by 5%, which then jumped the price of oil by 20%. So all that happened. They claimed
12%, but yeah,
12%. Excuse me.
Yeah.
They have already claimed ownership of it, and they're already saying more can come. But so we really don't know. It's one of the reasons we're getting such a long-wicked, doji, not sure what's going to happen candle out of oil right now, just because this may not just be a one-off strike. It could be. We don't know. But what we do know is that it happened, and supply is down. Price gapped up on it, but where do you go from here? That's really
that's what we have to talk about, because obviously the strikes and knocking out 5.7 million barrels a day out of Saudi Arabia, and most of that out of Saudi Aramco, which is one of their major refineries that was hit. Oil supply obviously decreases by 5% because it knocked out half of Saudi Arabia's oil exporting business. The open question, I think, obviously the market's going to respond bullish from an oil perspective anytime something along this lines happens. But the question I have from an oil perspective specifically is, how long does it take Saudi Arabia to get back up and running? I mean, are we talking days? Are we talking weeks? I don't think we're talking months, at least from the headlines and the reports that I've been reading, is that we're talking days to weeks at this point. And seeing how quickly they can kind of repair that damage is going to be important here.
The first thing they're going to do is actually just start rerouting. So they're not just going to try to rebuild the damage. They're going to just try to reroute and get things back up and running. They may not get to full capacity, but they'll at least get some stuff back on the market.
Yeah, they're going to put, 40% of Saudi Arabia's GDP is based on oil, right?
Yes. Yeah. They're not so dumb as to have everything running through one place. They just have to reroute right now.
Yeah.
Will they get back to full capacity in 2 days? Maybe not, but they're going to get something back pretty
days to weeks. If it's days, oil comes back down.
They're going to have crews out there, crews of hundreds and hundreds of people, maybe thousands of people working overnight for the next 2 weeks.
If 40% of our GDP was based on one type of sector, and that sector had some type of black swan event, we would throw the entire national economy to fix that.
That's what I'm saying. Right. We would, and that's what I think they're going to do. Is they're bringing in any man willing to put his hands to work right now. They're putting him to work.
Real quick here, boys. And Cody, let me know how my mic is as I go. I did drop the
It's
volume.
not as raspy. It's just a little quiet now, but yeah, it sounds a little bit better.
I'll bring it up and down. We'll find that Goldilocks sweet spot. I don't
Perfect
think
right there. That's it. You got it.
Goldilocks. You're there.
C'est la vie. I don't think it's just the 5.7 million barrels per day that they're worried about losing in the short term, whether it's 2 days, 2 weeks, 2 months. It's like the volatility index. It's the implied volatility of future disruptions. If you can have one of these attacks, Matt, and it spills into something else, I really do think oil investors and traders probably have to think, okay, is this more to come? Is this a one-time event? Are we going to isolate it? Because they will get production back up and running, Matt, but what does it mean for the region?
Well, we'll get into that in a second, but Mark's been saying this for months and months and months. Putin's got my back, right? Yep. In oil cuts, if they need. Saudi Arabia's got my back in oil cuts if you need. That's his buy-side argument. Now, apparently Yemen has his back as well, right?
Mm-hmm.
Yeah, I tweeted out immediately after this happened. I was like, I don't think this was the oil cuts we were expecting.
No. Saudi Arabia got their wish, though. They got their oil cuts. So it will be interesting to see how long this does impact. But there's a lot to play out here, guys. It's not just the impact in the oil markets, because one of the things that first came to my head when the attacks came out over the weekend was, how in the world did they attack Saudi Arabia's major refineries in the first place? Where's the missile defense system?
The SAM.
And how easy is it if it's that easy for Yemen to attack and make this major damage? You can anticipate more attacks coming in the future, and that does give the demand side, the buy side, more support from a geopolitical type situation as well. But what about those defense companies out of the U.S.? Don't you think that that's going to have a little bit of an impact, especially with Trump talking about, maybe Iran's, playing a little bit of a role here. And, obviously Pompeo came out and said that Yemen didn't attack, and this is more likely somewhere out of Iraq or out of Iran. So it's going to be interesting. But kind of where my head went was, first, obviously with everybody, is, oh my goodness, look what's going to happen to crude oil spiking over the weekend. But what about those companies like Lockheed Martin?
Lockheed breaking into a new high here, or close to it. I'm about to break out. Yeah.
It's breaking out right now, intraday.
I promise you, Saudi Arabia is going to protect the refineries. If it's like when you get hit the first time, you can't really, you're like, okay, I didn't see that as a vulnerability. Now I do. Now I'm going to go protect it, right? And so that's kind of where my head went with Northrop Grumman and Lockheed Martin and Raytheon, RTN as well. But the one that really kind of drove, and you're seeing it as the market's coming down here today, just a little bit, nothing, down 11 points on the day, about 0.4%. Raytheon's up 2.56% today. Lockheed Martin's up, 1.7% today. Here's Northrop right here, up 1.39% today. And especially with that Lockheed Martin trade, looking at a potential breakout here against the all-time high, staring right at $400. That's kind of where my head went initially, was those aerospace and defense companies, because they're probably going to be investing in missile defense systems and whatnot. And then, obviously coming back to crude oil, where's that impact in crude going to go? Because we knew it was going to spike big time. Everybody knew it was going to spike big time. Are we going to see follow through with this, Tim? And the question I have for you is, obviously we came into the weekend with a neutral rating on crude oil. Obviously, with what happened over the weekend, gapping out of all levels of resistance, this obviously is not a technical movement. It's more of a geopolitical movement here. But does this change your analysis on oil, and does it change the trend on oil?
Yeah, short-term bullish, cautiously, there's no doubt about it. It's not a new entry point when you gap out 12.8%. Don't get me wrong, there's no doubt. But if you were in a neutral position, you're going to hedge that neutral position. The intraday is completely day tradable in the foreseeable future, Matt.
And that's what I was going to say was, there's no swing trade here, right? I mean, you don't swing trade that. There's a lot of volatility. But you're starting to see, this is the overnight action on the futures, gap up and run up to about 63. Obviously on the overnight came back down. But ever since it found a bottom in when those European markets started opening up, you've just seen buy. And now you're breaking out of another resistance level from an intraday perspective right here on the 15-minute chart. So, you certainly don't have, this is not swing tradable in any capacity, given the fact that this is going to be news driven, correct?
Yeah.
Okay.
For me, no.
But it certainly could be a day trade.
Day trade, maybe even a position trade. I mean, you did just break out a major resistance on the, daily charts, Matt, that we've been holding now since May when it broke down below 60. It was in a range for several months, and now we are above that. A close above that with momentum is a momentum play. Now, could it and is it likely to establish some kind of volatility range between 58 and 64? Probably, but you never know. I mean, that's the thing about a news event like this, where you have the biggest commodity, a 2 trillion annual commodity, Matt, that just ran out 12%, 13% in one single day. That's not common, obviously.
No, it's the biggest intraday price movement, I believe, since 1998. And that's when oil was like at $20 a barrel, not obviously $56 a barrel, but obviously a massive movement. And the question I think everybody has is, can this be sustained on the geopolitical movement? I don't think there's an answer there. And I think anybody who comes out and says, oil is going to continue to drive up, they just don't know, because we do not know the most important question here. How long does it take Saudi Arabia to get back up and running from a refinery perspective? If it does not take them very long, if that takes them only a week to 2 weeks, oil's going to come back down, because yes, everybody's a little nervous about it happening again. But the reality is, if they're going to continue to produce, and Trump also discussed this today, he said they were going to open up our oil reserves to increase our supply of oil.
I was just about to say that's going to flood the market. If we start flooding the market with our barrels, it will bring.
And we know how much barrels we have. We have massive supply in oil reserves. So it's going to be interesting to see how this plays out. And obviously, we'll be here with the crew every day this week to ensure that they get the utmost news and technical analysis here. But from a gap out perspective, you got to move this into a bullish territory, no doubt about that. But it's going to be volatile. Another thing that kind of leads, if oil is going to continue to increase in value in an economic environment where we've seen the entire globe slow down, isn't that also going to impact the global economy as well?
It's a good question. Yeah, probably will. There's no doubt about it. I mean, higher oil prices in weaker economic conditions globally. I mean, we did see out of China just today, Matt, their production numbers are down. So
worse in 18 years, Tim, since 2000. And stop me if you've heard me say this before. The worst since X amount of date, right? We've seen that with China industrial and economic production for the last year. The worst since 09, the worst since 98, the worst since 02. And in Chinese industrial production today came in at 4.4% versus the expectation of 5.2%. And even the Chinese premier came out and said, don't expect us to grow in the 6% any longer. That's what happens when your economy starts growing up. It's easier to move a $10 stock than it is a $100 stock, right?
Yes.
It's easier to move a $1 trillion economy than it is a $12 trillion economy. And so these days of this emerging market of China just growing at 6, 7, 8, 9% yearly, that's not going to happen again. It might happen in a single year, but you can't expect that moving on in terms of every single year China doing this. That is very, very concerning, especially for oil. China's the number one importer of oil, and still most oil is sold in dollars, and the dollar is relatively strong against the Chinese yuan right now. So when you're looking at that scenario, I see this as impacting the Chinese economy even worse from an economic condition, and that will spill over to the rest of the world as well. So there's a lot to unpack here in terms of what happened with oil and how it's going to impact not only the oil market, but the aerospace and defense market, the currency market, the precious metal market, and then obviously it's just another ding that we've seen from a global economic slowdown perspective as well. So that's kind of what I'm seeing here. Also in the news, and we're going to get here into the S&P 500 and break down the indexes. Just let me kind of give you the news. New York bans e-flavored cigarettes. They are the second state to ban those e-flavored cigarettes. Congratulations to New York. They should. They are targeting children with those things. Michigan was the first one, but I think you're going to see this over and over and over again. Tim, I'm going to turn it over to you with the news in line, and let's go through the analysis.
There's several things happening out there, individual companies, and obviously the energy sector. One thing we do each and every Monday is we get into sector analysis step by step by step by step. Matt, stock prices I thought would have sold off a little bit more aggressively. The breakout last week has held. And 2950 on the S&P was resistance. Now it's assumed support point. We also have 3030 up here. And the question I have for you is, with this overall condition right now, are you still bullish?
You have to be. I mean, when I saw the news coming out of the weekend, I fully anticipated crude up, gold up, silver up, dollar volatile, but most likely up. And I expected stocks to come down. And I thought, coming into the weekend, obviously we were slightly bullish in the market coming into the weekend. We were overextended. We were range up 9 straight days up in the Dow Jones. Not 9 up in the S&P, but they're both kind of moving in line with one another. I thought it would give everybody the mentality to say, okay, let me close out of my position, but they didn't do that. I mean, a gap down on the futures market, but from the cash open, the sellers just have not been there. It just hasn't. You gap down on the futures, and then it's just kind of faded. Sellers are not selling right now. The buyers are still looking for reasons to buy.
Yeah. Dow, S&P, and NASDAQ are all down just a hair, but still holding their uptrend. Russell is actually up, by the way.
One of the things that it might be waiting on is a major announcements coming out of the Fed this week, right?
Yeah.
So you have not only there's 2 things that are going to be happening this week. And in response to what we saw with oil, I think it even gives it a higher probability of these 2 things happening. Number one, the Fed is going to cut. That is number one. And the only question is it a quarter point or a half point? I still believe it's going to be a quarter point.
Actually, Matt, I wanted to bring that up because I talked about it in the Forex report. The argument for the past month or so has been, is it going to be a half point, quarter point? The CME has switched to, is it going to be a quarter point or no cut?
There is some analysis
not even there anymore. There's now a 20% chance of no cut and 80% chance of a quarter point cut.
And I think it's a quarter point. Personally,
I can see that as well, but the half point isn't even.
Especially what happened over the weekend, though. Especially what happened over the weekend.
Uncertainty. Yep.
But the bigger one's going to come out of China, and that's the one I'm looking at. I'm expecting China to do something from a monetary policy perspective to even go extremely more dovish than what they've already been doing. So those 2 things this week, I think the market's kind of waiting on. And so you're probably most likely going to see some type of fade action until we get price action until we get monetary decision coming in on Wednesday.
Small gap down on risk of the oil and the international conflict news, no doubt about it, is very common. The fact that it's holding, in my opinion, is pretty impressive. That Wednesday Federal Reserve event is the one that we're going to be paying attention to. We'll break it down tomorrow and Wednesday and Thursday as we get closer to that event. Russell's up, Matt. A lot of energy stocks in the Russell, and just what it comes down to. And we're pressing up near 1600. For me, resistance is more like 1610, 1615. What do you see in the Russell?
Yep. It's a zone. I mean, 1600 to 1620. Whenever you're talking about those resistance levels, it's always a zone. It's about 1 ATR total. The current ATR in the Russell 2000 is right around 28 right now. And so when you're looking at a zone of 1600 to 1620, you got your top over here at 1620. I would not call it a breakout at 16. You could trade it above 16, but I'm saying the true breakout, in my opinion, would be 1620 here. But the Russell's showing a lot of strength. And like you said, Tim, you kind of nailed it on its head. When you're looking at the energy sector here today, the energy sector has been just underperforming the entire marketplace for the last 6 months. And even in this recent rally in the energy sector, I think a lot of us were looking at this as an opportunity to re-engage into some short positions as we started seeing the energy sector coming in to this very consistent trend line. But obviously with the news coming out over the weekend with Saudi Arabia getting hit by Yemen, you're looking at this from a gap out situation. Obviously a little bit of profit taking on the intraday, but that's got to change the analysis in the energy sector as well. I would put energy, in my opinion, right smack dab in probably the positive 45 to 50 yard marker. I wouldn't call it bullish yet, because again, when you're looking at this, you just don't know with the 1 day movement.
It's not a buy, but it is moderate, slightly bullish.
I would say it's not a buy, but I'm not looking to short.
Yeah, that's
right.
Yeah.
I think that's the difference here. Is I'm not looking to buy, but I'm certainly not looking to short here until we see some clarity, guys. For me, until we see clarity outside of day trading, it's a stay away. And that clarity could come today. That clarity could come tomorrow. We're going to get reports on this every day. And so we're going to get that clarity, in my opinion, fairly quickly. I don't think it's going to take 2, 3, 4 weeks for us to start to see where Saudi Arabia is doing from an oil production perspective.
And we'll break down all sectors one step at a time. I want to come back to some of the energy products, though. And Matt, natural gas actually looking incredible. I keep talking about this product over the last month. In the halftime report, we keep bringing it up. It's a wonderful cash flow product. I love the trend reversal. Now, it did jump up. It doesn't have the same kind of implication with the attack that the other energy commodities are going to, like, let's say, gasoline or heating oil. But natural gas now moving bullish, Matt.
Well, we put it right there at the 40-yard marker in the newsletter this weekend, and I think there was a very good debate on whether we should put it into the bullish territory for the first time in the year, and we probably analyzed natural gas and discussed natural gas more than we did almost anything else, because when we analyzed everything else, we kind of kept a lot of the same type analysis, but with natural gas, I just felt like we were seeing too much price appreciation. We needed to be slightly bullish. We came back down because it hadn't broke out. We wanted to see a base first, but that's a breakout. And like we've said for a month straight, get it on a watch list. Mm-hmm. Get it on a watch list, because natural gas has seasonality here too, Tim.
Yeah, there's no doubt about it. I mean, going into the fall time, obviously you have that seasonal bullishness built into it. It's just
happening a lot earlier.
The chart is looking really, really good. Move on to the metals market, if you will. Gold, silver, platinum, and palladium. Want to take a quick look at all four of them.
Let me take a quick peek at the dollar. Let me take a quick peek at the dollar here. Cody, you did the Forex report for tackle trading over the weekend. Kind of give me your analysis on the dollar. We did downgrade it down into the positive 40 territory, but it was tough ranking those currencies this weekend. We're seeing some up and link here, Cody, that is not usual. So give us your quick read on the Forex market in general and the dollar.
Overall, for this week, as I talked about in the Forex report, mainly, guys, there's a lot of news events coming out, and this was not even talking oil and that whole jazz, but we're talking Brexit, China news, what's going on with the Fed coming out this coming week. Lots of things going on. Dollar's back up. We moved to the 40, which means we are neutral on it with a slight bullish leaning, excuse me. And you can see that even from where it jumped up today, it's not back above that wedge pattern. So we're still neutral. So I really like where that ranking is. And most things all kind of got compressed into that center line of neutrality for just any market. We had decoupling of the Aussie and the New Zealand dollar, which rarely...
That's the one that kind of got me like, what is going on here?
Mm-hmm.
I don't understand how that's happening. You have strength in areas that you don't expect, and you have weakness in areas that you also don't expect. So there's a lot of just uncertainty coming out this week. So what I basically said is, if you're going to tread in the waters, tread lightly. And I wouldn't be doing any swing trades this week. Maybe a day trade. I'm talking a few hours.
Somebody sent in an email to tackle trading. They said, why don't you guys put your stop loss entry target on your Forex like you do on your stock and options and commodity report? And my response was, because it's impossible.
Because it could change in 15 seconds.
Because it's literally impossible. The dollar is not a great swing trading instrument right now. Look at the volume. Try swing trading in that environment. See how good that's going to work out. You're going to get hit both sides of the ledger.
Not only that, but that's not just one slow, easy day of movement. That's probably like each of those big movements is like 1 hour, just boom, move.
There it is right there. Good luck with that. Good luck putting in your step system in that. You got it. You got to.
Now I will have to talk about this in Forex 101, how to use the step system, but there are cautions that I'm going to teach in that. There are things to take into account when you are trying to directly trade currencies. But right now, the dollar is not a swing trading instrument that any of us would recommend.
Well, and sometimes it is and sometimes it's not, right? Yeah. I remember back in 2014, 2015, when I was doing the Forex report before I turned it over to Keith, I would put entry, stop, and target in the report.
When it makes sense. I mean, look how consistent it used to be.
Because the dollar was a very consistent tradable instrument back then. And and the dollar was moving in line with almost every other currency. And it was working out very, very well. But when you trade currencies, you can't force your will in the market. You can't say, I'm going to swing trade. That's who I am. You got to play with what the market's giving you. And right now, from a dollar perspective, you have two things. You have day trading and you have carry trading. And that is it.
Yeah, which basically is position trading and investing. There's no doubt about it. So you've either got to lengthen the time frame or shorten the time frame when you're trading currency.
I will tell you, the only thing consistent in the dollar right now is this support line. That's about it, right there. As long as that support line holds, I promise you, the currency, the dollar is going to be on some degree right of the yard markets.
Yeah. And by the way, Cody did mention Forex 101. Those of you who are pro members at Tackle Trading, at some point in the next couple weeks to couple months, Matt, we're still in production on that, but we will be releasing a new course. Cody, what is our target on that?
It better not be a couple.
No, I was about to say it better not be a couple of months. I think we're targeting the 30th right now.
We're targeting the 30th.
Yeah.
That's the target. So
I like it. I like that you said that on the halftime report. Now I'm going to put
I said it live. I know. Now you got to push me on it.
Not only me and Tim get to push him on it.
That's right.
You got an entire
Crew's got to push me on it.
To push on it, buddy. So
That's exactly
that was a mistake, young man.
Oh, no.
You never see Tim try to paint you in a corner, and you were like, no, let me paint it myself. Let me paint it myself.
No, I am an advocate of say yes and figure it out. That's what's got me this far. Say yes and figure it out.
Yeah. Yep. I like it. Good mindset. By the way, metals markets, Matt, I thought they could have rallied a little bit more here today, but the volatility and the sell-off, pullback in gold and silver was legit here the last few weeks. We're trying to find a little pivot point, but it's not confirming yet. What's your read on gold and silver?
Yeah, gold and silver, we still kept positive ratings. And I talked about silver while you were in Philadelphia quite a bit because it, broke down out of that good bullish retracement. My read on this was a little bit of an overreaction on gold here, just given the fact that the market's just buy the last 9 days. So obviously gold being that safe haven type play when the market's just going 9 days up in a row, it's not exactly going to do great in that environment. But I'm not going to switch it to anything outside of, I think we gave it a 30-yard markers or 25. I can't remember. We downgraded it just a little bit because you can't discount the technical analysis here. It's no longer that raging bull where we're buy on support. It's going to, in my opinion, you're going to see some neutrality settle in on gold for the foreseeable future. But I'm not worried about gold from a long-term perspective. Just short-term, I'm not looking to do anything aggressive with it on the short term. Looking at silver, I thought it was a massive overreaction to the positive news coming out of China and the U.S. on Friday when they were kissing and seemingly making up. And, Trump and Xi were hugging each other in long embraces and walking on the beach and all of that stuff. I mean, on Friday, it was just like everything was positive news headlines coming out of the Chinese-U.S. trade war. Silver took an absolute beating on Friday. I believe it ended up down more than 4%. And I said on Friday that I'm sticking to it. I think it's an overreaction. And, we saw a little bit of a gap out on silver. It's trying to reclaim the 20-day moving average. But you're just on silver here. You're running against some pretty stiff levels of resistance right here, about $18 to $18.30. And so on the gap out on the futures market, this is the Friday price action, and you can kind of see that pain when it closed underneath that $18 mark. And I guarantee there's a lot of stop losses right under 18 because that's exactly where I would have put a stop loss if I did put a stop loss on this trade, which I did not. So in terms of this, I'm sure there was some stop hunting, driving silver down, gap out on the futures market, goes up on the Japanese market and the Chinese opens right here. And then you really just kind of fade throughout the rest of the European market open until you get to the cash open here in the US. And obviously we saw a little bit of appreciation on the cash open here in the US. But again, where's it coming smack dab into? Right at $18. That's going to play a role here. So I'm not looking to re-enter anything here, but if we start reclaiming $18 and eventually break back out of 18.30, that certainly is tradable at that point, in my opinion.
Yeah, I agree with that 100%. And by the way, we found the price for Bitcoin, Matt. It's 10,000. It does not want to move up or down past 10,000 too far. It just comes back to it. It's almost like it's pegged to 10,000.
Let's just peg it to 10,000. Let's just say, okay, 10,000 Bitcoin is equate to $1.
Yeah, might as well. It's not trading too much.
Did you say it backwards like that on purpose?
No, I said it that way on purpose. Yes.
Okay, I just want to make sure
I said it appropriately. I was wondering how many people
didn't catch it.
I didn't catch it at first. No,
I was wondering how many people would get my slight little attack on Bitcoin today.
Jab there.
Just a jab. It was just a tickle. That's all.
What is it about you? You used to love Bitcoin. You used to be the biggest proponent, the biggest
I was.
fanboy I've ever met in my life about Bitcoin.
I was.
It was this
I was an early
euphoric
adopter.
run up. It's when the guys on Facebook started coming out and posting about how much money they were making and all that kind of stuff.
It's when they started scamming people using Bitcoin, when they started putting out programs telling people to double mortgage their house to buy Bitcoin.
When I saw an idiot real estate speaker tell people to take out $100,000 loan when Bitcoin was $18,000 and all you had to do was buy Bitcoin, yeah, I was out.
Do you hate tulips too? I mean,
Yeah,
at some point,
I don't know. My wife's most hated flower is a tulip. If I brought tulips home, I'd be going out again to buy some roses.
Listen, I think cryptocurrency still has a very bright future. I really enjoyed talking about cryptocurrency with Chris
blockchain
Blasey.
itself can. It may not be
Blockchain
Bitcoin.
is.
It may be some other coin that hasn't even been invented yet. But
Yeah.
I do believe that the tech industry and blockchain and that source, yes, there could be some long.
There are still things, Tim, I like about Bitcoin.
I know. We'll get you there someday, Matt.
There are still things I like that it's decentralized. I'll tell you when I was out, when they started doing all the forks.
Yeah.
That's when I was out, because one of the number one reasons I liked Bitcoin was they had limited supply chain.
Yeah.
Right. You couldn't do to Bitcoin back then what you can do to currency today. And that's just increase the supply. One of the benefits why Bitcoin was created was limited supply. It was anti-central banking. And so, yeah, because as an individual who's anti-central bank, yeah, I embraced Bitcoin from the very beginning. Right.
Mm-hmm.
I really I liked what it stood for. But when they started doing the forks in 17 and 18 and started increasing the supply of it and started creating Bitcoin Cash and Bitcoin this and Bitcoin that, I'm just like, you're losing the reason why people like me like you.
Mm-hmm.
Right.
Yeah.
And so it wasn't just the Facebook warriors, although that did play a role in it.
That was the tipping point. That pushed you over the edge.
The forks is what got me at first. And then, and maybe that's just my limited knowledge of how Bitcoin and all cryptocurrencies work. And obviously I've not done as much research on it in the last year and a half as I did in the first 6 years of it. But yeah, there would have to be a lot for me to embrace it again.
A couple of companies in the news that I want to get to, but I do want to break down the sectors here first. Every Monday morning, Matt, we go through every sector one at a time and give it a ranking from the weekend.
Jimbo, that's all they say. That's what they say to you, Jimbo. That's what they say, that they're technically required because they fixed this issue. No, I don't believe in that argument. But Go ahead, Tim.
No, just run me through the sectors, Matt.
All right, let's look at some sectors here, because we did have some upgrades and downgrades. And as always, we start with the S&P 500, ladies and gentlemen, looking at the spiders here for the S&P. It was a tough ranking on the spider because you had a lot of price appreciation over the last couple of weeks. Typically speaking, when you see that type of bullish behavior over a couple of weeks, you see a little bit of a bigger upgrade. But because it was overextended, you can kind of see the RSI right here, the relative strength index, well far over the 70 mark, which is the technical overextended range. As you've seen that overextend from a price action, overextended from an RSI perspective, coming really right into that major level of resistance. Obviously, we're talking about the all-time highs here. We did upgrade the S&P 500 as a response to what was seen historically, but not as much as technically we would if we would have saw that breakout last week. So we did rank it at the positive 35-yard marker for a slightly bullish ranking. The dollar had a positive 40-yard marker. That was a slight downgrade. Now let's go ahead and look at our aggressive sectors, and let's start with the twins of basic materials and energy. Obviously, we already talked quite a bit about energy here today. The gap out against that very consistent trend line does move the yard marker. We did upgrade it out of the bearish territory for the first time in a long time here, though. We gave it a negative 45 ranking based on what I'm seeing here today. That would be a positive 45 ranking if I knew that Saudi Arabia would be hit with a massive drone strike. But since we don't know those things going into the weekend, you have to basically, rank it how you saw it. So we did give it a negative 45. That would be upgraded to a positive 45. Looking at its twin sister, basic materials here. Basic materials just running very similar to what's happening in the overall market here, but it's coming really kind of right into that level of resistance at 59 by 59.5. We did upgrade it into the positive 40 territory, so not a bullish ranking, but it's bullish with the anticipation of a breakout. And so when you see a 40 ranking, we're neutral, but we're expecting some degree of breakout. And what I love about what's happening today in the basic material sector, even though I'm, long silver, long gold and whatnot, I love the fact that we're retracing, coming down. You guys know this about me. I hate overextended breakouts. I don't trust them. They lead to a lot of fake outs and a lot of upset traders. I think patience is kind of the word of the day with the basic material sector. Don't chase the dragon. Let it set up. If we set up and we get a little bit of a cup and handle type situation where you have your cup and then you perhaps have your handle over here, at that point, that breakout would be very, very, very good. So keep an eye on 59 to 59.5. Keep an eye on this as the 20-day moving average catches up as well. But keep an eye on the material sector. It might take a week or a week and a half, 2 weeks to set up, but that could be something pretty good when we do see it. Looking at the communication sector, we matched it with Mr. Market because it's doing the exact same thing as Mr. Market is, just overextended, running up into that resistance level. Keep an eye. I know it says 51.87, but I'm going to call that 52. So anywhere between 51.70 and 52 would be kind of your breakout channel. And you're most likely going to form a little bit of a cup and handle, very similar to the basic materials sector as well. Looking at your next sector, let's go with technology here, XLK. XLK is in more of a high base type situation. And this is a little bit different that I'm seeing in technology than what I'm seeing in the S&P, what I'm seeing in, a lot of those sectors like basic materials and not so much energy, but communications, consumer discretionary. All of them ran. This didn't run. It ran up, broke out, and then it's forming a high base. And you can kind of see the difference here on RSI, whereas the S&P 500 got all the way up in here to 80 and, discretionary got all the way up in here to 80. You're forming this high base type situation in technology, and you are not overextended here. So if I'm looking at this 82 level as perhaps a breakout, and I would consider that a breakout at 82. Yes, I see 82.75, but if you break this down into an intraday time frame, you can kind of see how that $82 level plays out right here, how that $82 plays out right there. I would like to see a close above it to call it confirmation, but this is a sector that while we're waiting for basic materials to set up, and while we're waiting for, energy to perhaps set up, and while we're waiting for communications to set up in their cup and handle type situations, this is a sector that we might see set up a little quicker than some of those other sectors out there because it's not overextended. It's forming its high base. So keep an eye on technology in general, as well as that 82 handle. Looking at the next sector, let's go with the industrial sector here. Industrial sectors just working very similar to what we're seeing on the Dow Jones. Obviously, extremely overextended here. Look for a bullish retracement. Look for a high base, but this is certainly something you're looking at from a buy-side mechanic. And look at that 20-day moving average, trying to catch up to it. Watch the base form, watch the flag form, watch the retracement form. One of those three technical signals are going to form, in my opinion. Patience, once again, in the industrial space, but you should be looking at stocks in that space as well. And then the last aggressive sector is that, well, I had healthcare there. And I'm going to say, well, healthcare is an aggressive sector, but we'll technically go with what they categorize them as, is consumer discretionary. And similar to what I'm seeing in technology here, Tim, you got the high right there at 146. That's kind of where we kind of ticked into last week, forming a little bit of a high base. And as high base goes, you always wait for the breakout. And I would call that breakout not above 146.60. I'm looking at that significant whole number of 145 on the discretionary space. Looking at your 5 defensive sectors, and we'll start with the 3 sectors that act much more like an aggressive sector. The first one being the financial space. The financial sector has done really, really, really well over the course of the last 3 weeks in the marketplace. You're extremely overextended coming into that breakout channel. This to me is profit-taking zone. For any trader, any position trader looking at making all that money over the course of the last, 3 weeks, that just screams to me, lock profit in, and especially in front of the Fed. The Fed has a big impact on the financial space. We're expecting a lowering of interest rate this week. How does that impact JP Morgan, who just got downgraded today? So for me, this space would be an easy space to start locking in profit if you are in this space from a swing trader or a position trade perspective, especially in front of the central bank. announcing interest rates later on this week. The next one here, let's look at the next aggressive defensive sector. Yes, that's how I'm going to categorize them from now on, is XLV, the healthcare space. The healthcare space, oh, and by the way, we did upgrade financial coming into the positive 40 territory, but that's not looking for a new rebuys. That's just because we think we're going to see a little bit of a fade, a little bit of a retracement here. Healthcare is just smack dab. We gave it a 50 rating, slight upgrade there in healthcare, but it is just stuck in neutrality here. Overhead resistance at 92. Under support at 88.50 by 89. And until we see some type of breakout or some type of leadership coming out of this space, I just don't see this as a space of the market that you should focus on. Sell into weakness, buy into strength right now. Looking at the next aggressive defensive sector, that would be we're done with our aggressive defensive. Now we got our three defensive sectors here. The first one, consumer staples. Consumer staples getting it just taken on the chin here early today.
Can we call them hybrids? I don't like to ever cut somebody off with a talk, but I love your new designation, the aggressive defensive. We'll just call them hybrids.
They're not defensive though.
But they're not aggressive either.
Yes, they are. They perform
Sometimes.
exactly. Do you really want to have this argument?
It's my birthday.
Absolutely. You want me to correlate these sectors?
No.
I will correlate these sectors right now for the next 45 minutes, showing you how healthcare and finance perform exactly like aggressive sectors, and they do not perform like defensive sectors in any capacity. And if you want to go out there and throw out, but Matt, there's the healthcare appliance companies, and there's the healthcare providers, and I'll just say biotech. And if you wanted to say, well, Matt, there's the insurance companies and financial, I'll just say banks. Right.
Hey, listen, I'm delta hedged and theta positive. I literally have the time, so we can do it if you want.
I am too. Like we talked about last week. That's the way to go here. Delta neutral, theta positive here. I will win that argument, though. At some point, the S&P will recategorize finance and healthcare as aggressive. Financial's been aggressive for 15 straight years, by the way. This is nothing new. But coming on to consumer staples, we did downgrade it to the negative 30 territory because we saw slowing momentum. We were anticipating that breakout. We obviously did not get it. Now it's underneath the 20-day moving average. Any bull side argument has to start with reclaiming the 20-day moving average. So if I again see the price action today, I would have downgraded even more, probably into the negative 40 territory. But that's hindsight being 2020. Looking at your next defensive sector, utilities here, just kind of hovering in neutrality a little bit in its short term, really kind of tight against that 20-day moving average. We did downgrade utilities into the positive 25 territory, and it is still our highest ranked sector out there. I do love the consistency here. That pivot relationship does give me a little bit of concern. Let's see what happens to tomorrow and the next day. If we see some price appreciation when the market's coming down, that's going to be a good ranking, but I still like it above the 20-day moving average. And then finally, certainly, but not least, the real estate sector. And again, this is not real estate like we think about real estate. This is full of REITs and real estate investment trusts and so on and so forth. Good day here today, finally performing the way it should after kind of a shocking little movement we saw last week. From a buy side mechanic, it starts with me at 39.20 by 39.30. Until it does that, nothing really to see here. But obviously, real estate and utilities can be a safe haven type scenario in events that could see market volatility.
Mm-hmm. What's interesting is watching that Fed watch tool and the expectation of the rate cut or not. They're going to cut a quarter point, don't you think, Matt? I mean, I would be very, very surprised if they did.
I do believe the economic data supports zero. Like we've seen pretty decent economic reports coming out of the U.S. in the last 3-4 weeks. We saw it, but with inflation ticking up last week, we saw the CPI report and the PPI report both tick up. With the geopolitical situation that we saw here today, an increase in oil is not. It will hurt the global slowdown, right? In a good economic times, oil can be whatever it wants to be. We'll pay for it. But in tough economic conditions, we will start cutting out a little bit. So that's going to have an impact.
Based on what you said there, though, the economic data would support zero, but we're all expecting a quarter point cut. Wouldn't that be capitulation to political pressure then, which is the main thing that we think the Fed should never do in the first place?
Or global currency pressure, guys.
Wait. Hold on. if you want me to rail against the Fed and how bullshit policies they have, I certainly can't do that. But the Fed is not an independent arm anymore. And I've already said that, Jay Powell, I used to call him the cutthroat Jay Powell. He lost that name. He's the coward Jay Powell. So the coward Jay Powell, I fully expect to capitulate into political pressure, and I fully expect them to capitulate into what's happening from an interest rate perspective around the world. China's going to go into negative territory. Europe just announced negative territory. Japan's in negative territory. 16 out of the top 20 economies in the world are in some degree of negative bonds. So, if I was running the Fed, would I cut? No, absolutely not. I'd raise. I'd absolutely.
I was about to say I'd be raising.
So because I'd help savers out, and the dollar being a strong dollar. So I don't believe in the race to the bottom. I'm not one of those people that buy into the political, economic, or ridiculous arguments that every country around the world should increase the money supply to lower interest rates to devalue their currency. That I don't buy that argument. I don't believe in that argument.
What you're saying is you think modern monetary theory is bullshit?
Yes.
Because I do.
Yes,
I absolutely think it's bullshit.
I don't think I'm saying anything shocking to the team that I'm a hawk from a.
I know. I just wanted to kind of get this out there because the Fed meeting is coming up, and this is probably something that's going to.
No, I'm analyzing the Fed based on my reading of the tea leaves of the Fed. Right. If I ran the Fed, there would be a different analysis. I can promise.
I have tea leaves. I have like the feathers and stuff, like Rafiki from Lion King, throwing those in the air. Like anything that I can just get a whiff of, I'm like, oh, this is what's going to happen.
Which would be better economic analysis than we've seen out of the Fed in recent years.
It's always a good day.
So absolutely, I expect a quarter of a point. Can they justify none? Yes, I absolutely 100%. They can justify no interest rate decrease. They could justify an increase in the rate. Absolutely 100%. But what are they going to do? If I had to put my name on the line right here, they're going to cut a quarter of a point.
It's down to 65%. I got to tell you, it was as high as 95 just 2 weeks ago, I believe, that they thought that they were going to cut a quarter point. The Fed Watch Tool has got a 65% probability today that they will cut.
Whoa, it was 80 when I wrote this report on Saturday.
Yeah.
Wow, that's a big change in 2 days. Interesting.
Yeah. Two quick ones, Matt, here. FedEx and Adobe have earnings Tuesday after the bell. We might be able to price those tomorrow. Just be aware of them. I like the real estate sector, by the way, if the Fed does come in and cut rates. But there's one company we did not talk about that has to be mentioned. That's General Motors, GM. And they had a huge strike. 50,000 employees and contractors went on strike on Monday. Matt, stock is not doing well. The automotive sector in general has been a tough space for a long time. Company gapping down into a neutral range here.
Well, it was already neutral even before that. But upwards of, what is it? The United Auto Workers strike, right? Mm-hmm. 46,000 United Auto Workers strike against GM. They already struck a deal with Chrysler and I believe Ford, right? Yeah. They already struck a deal. They have not struck a deal with GM yet. But I just want to go tell those 46,000 workers, strike.
Yeah.
Get workers' rights.
Yeah. Yeah, it's good. It's part of capitalism, by the way. Labor and management and ownership absolutely should be negotiating 100%. At all times, 100%. All right, guys. Very good job here today, Matt. Very good job, Cody. Appreciate all the preparation that you do each day for the halftime report. Not good for the stock. No, it is not good for the company. Halftime crew, we will be back tomorrow. If you're a brand new member of our community, join our onboarding on Monday nights. Frank does a really, really good job helping beginners get involved. If you're interested in our pro membership, you can always sign up for 15 days for free and subscribe to our channel. We've been having a lot of growth here recently. And by the way, I just saw the thumbs up here on the bottom. We're not even at 50% here, guys. If you've not clicked thumbs up yet,
flag. We're not even at the 21 to 23% retracement here. I think we are, but I just wanted to say the joke.
And
give us a 38 to 61% retracement. Goldilocks, come on.
Let's at least get there. Yeah.
Let's get those clicks on.
And by the way, the Bears did give me a gift for my birthday.
They did give you a gift.
Yeah.
I'm not sure that gift was justified given the fact that was not, roughing the quarterback.
Dude, we had one of those called earlier in the game. That happens. That's the NFL.
Trubisky is like a ballerina. They touched him. He went down.
First of all,
it wasn't even a solid football hit.
They should put just red flags on those quarterbacks, and the
Just wear
quarterbacks
the red
play flag
jersey.
football. Yeah.
Well,
Give them the red jersey.
I get that, Tim, but Drew Brees hurt over the week.
Yeah.
Ben Roethlisberger hurt over the weekend. Carson Wentz hurt over the weekend.
There's only so long that you can play as an older guy as a quarterback before that happens.
Tell Tom Brady that.
I know, and you know what? You say that if Tom Brady continues on for another year or two,
you keep railing against 42-year-olds, and I'm going to have something to say there, buddy.
That's right.
Hey, I'm not saying 42 is old in general.
Ageism, Cody.
In the NFL,
Ageism, Cody.
Yeah.
Ageism.
All right, guys. Ageism. Well, Matt, I am now north of 40 with you there. I'm right there with you, buddy. Yeah. All right, guys. We will see you tomorrow. Halftime crew. I appreciate you guys. See you tomorrow.
Later, crew.
Mm-hmm.